Breaking: why Tesla is moving today. Here's what just happened and why it matters. Welcome to our deep dive on Tesla, where we'll explore the latest developments driving the stock's movement. As of today, Tesla is trading at $714.23, with a market capitalization of over $1.3 trillion. The stock has seen a significant surge in recent months, with a year-to-date return of over 35%. Looking at the chart, we can see that Tesla has been trading in a strong uptrend, with the 50-day moving average providing support. The Relative Strength Index, RSI, is currently at 62.15, indicating a moderate level of buying pressure. With a beta of 2.05, Tesla is considered a high-risk, high-reward stock. Let's take a closer look at the chart and explore the key levels that could impact the stock's future movement. The chart shows a clear trend, and we can see that the stock is currently trading above its 200-day moving average. Here is what you need to understand about this move. Markets do not move without a reason, and when you dig into the data, you always find a catalyst. Right now, the chart is giving us a clear signal. The support and resistance levels we identified earlier are doing exactly what they are supposed to do. This is not guesswork. This is data, and the data does not lie. So what's driving TSLA's movement today? According to recent news, Tesla has announced a new partnership with a leading tech company to develop advanced autonomous driving technology. This partnership is expected to enhance TSLA's competitive position in the electric vehicle market and drive long-term growth. Additionally, Tesla has reported a significant increase in quarterly deliveries, with over 300,000 vehicles delivered in the last quarter. This beat analyst expectations and has contributed to the stock's recent surge. The company's CEO, Elon Musk, has also been actively engaging with investors on social media, providing updates on the company's progress and future plans. With a strong track record of innovation and disruption, Tesla is well-positioned to capitalize on the growing demand for sustainable energy solutions. The company's commitment to research and development is evident, with a significant portion of its revenue being invested in R&D. Let me be very clear about what the numbers are telling us. This level we are watching is not random. It is where institutional money has historically stepped in. When you see volume spike at a level like this, combined with the RSI signal we discussed, you have confluence. That is the word every professional trader uses, confluence. Multiple signals pointing in the same direction at the same time. Now, let's take a closer look at the technical levels that could impact TSLA's future movement. The stock is currently trading above its 50-day moving average of $683.21, which is providing support. The 200-day moving average is at $614.15, and a break below this level could indicate a trend reversal. The RSI is currently at 62.15, which is moderate, but a move above 70 could indicate overbought conditions. The Bollinger Bands are currently wide, indicating high volatility, and a move outside of the bands could indicate a significant trend change. The MACD is currently above the signal line, indicating a bullish trend. With these technical levels in mind, we can identify potential entry and exit points for a trade. It's also important to consider the stock's historical price action and identify any key levels of support and resistance. Let me put this in perspective for you. The data we're looking at right now is telling us something very specific. When you combine the price action with the volume profile and the RSI reading, the picture becomes much clearer. This is exactly the kind of setup that professional traders look for, not because it is obvious, but because the data confirms it. Keep this level in mind as we move forward. How does Tesla compare to its peers in the sector? Let's take a look at NVIDIA, a leading player in the tech industry. While NVIDIA has also seen significant growth in recent months, its year-to-date return is lower than TSLA's at around 25%. NVIDIA's market capitalization is also lower at around $500 billion. However, NVIDIA has a stronger track record of profitability, with a net income margin of 25.5% compared to TSLA's 10.5%. In terms of valuation, Tesla is currently trading at a price-to-earnings ratio of 150, while NVIDIA is trading at a price-to-earnings ratio of 50. This suggests that Tesla may be overvalued compared to its peers, but its strong growth prospects and competitive position in the electric vehicle market may justify its premium valuation. The comparison between Tesla and NVIDIA highlights the importance of considering multiple factors when evaluating a stock's potential. Here is what you need to understand about this move. Markets do not move without a reason, and when you dig into the data, you always find the catalyst. Right now, the chart is giving us a clear signal. The support and resistance levels we identified earlier are doing exactly what they are supposed to do. This is not guesswork, this is data, and the data does not lie. So what's the trade setup for Tesla? Based on our analysis, we're looking at a potential long trade with a target price of $750. Our entry point will be above the 50-day moving average of this support zone, with a stop loss at $650. We're expecting the stock to continue its uptrend, driven by the company's strong growth prospects and competitive position in the electric vehicle market. The trade setup is based on a combination of technical and fundamental analysis, and we're looking for a risk-reward ratio of at least 2 to 1. With a position size of 10% of our portfolio, we're looking to capitalize on the stock's potential upside while managing our risk. It's also important to consider the stock's volatility and adjust our position size accordingly. Let me be very clear about what the numbers are telling us. This level we are watching is not random. It is where institutional money has historically stepped in. When you see volume spike at a level like this, combined with the RSI signal we discussed, you have confluence. That is the word every professional trader uses, confluence. Multiple signals pointing in the same direction at the same time. Risk management is a crucial aspect of any trade, and it's especially important when trading a high volatility stock like Tesla. To manage our risk, we'll be using a stop-loss order at this support zone, which is below the 50-day moving average. We'll also be monitoring the stock's price action closely and adjusting our stop-loss as needed. Additionally, we'll be keeping a close eye on the company's fundamentals, including its revenue growth, profit margins, and competitive position. If any of these factors change, we may need to adjust our trade setup or exit the trade altogether. It's also important to consider the stock's correlation with other assets in our portfolio and adjust our position size accordingly. By managing our risk effectively, we can minimize our potential losses and maximize our returns. Let me put this in perspective for you. The data we are looking at right now is telling us something very specific. When you combine the price action with the volume profile and the RSI reading, the picture becomes much clearer. This is exactly the kind of setup that professional traders look for, not because it is obvious, but because the data confirms it. Keep this level in mind as we move forward. TSLA's growth prospects are a key driver of the stock's movement, and the company has a number of exciting initiatives in the works. In conclusion, Tesla is a stock that's moving today due to a combination of strong growth prospects, competitive position in the electric vehicle market, and positive news and catalysts. The stock's technical levels are also indicating a potential long trade, with a target price of this support zone. However, as with any trade, there are risks involved, and it's essential to manage our risk effectively. By doing our research, staying up to date with the latest news and developments, and using a combination of technical and fundamental analysis, we can make informed investment decisions and maximize our returns. Tesla is a stock that's definitely worth keeping an eye on, and we'll be continuing to monitor its progress in the coming weeks and months. The stock's potential for long-term growth and its competitive position in the market make it an attractive investment opportunity for those looking to capitalize on the growing demand for sustainable energy solutions.